Morning, everybody. Welcome to the Flow Show. And just in case you have the luxury of a Bloomberg terminal, it's currently down, so you don't have that luxury. So no stories can be flung at us right now. So we might have to make up our own. Kay, got any stories you want to tell us about?
My sources are telling me the summer is over in the UK. It started to rain again here. For the rest, not too many stories. ICAP, or as we know, for those old enough, EBS in the old days, they will be happy that Bloomberg is down, so they can have a bit more volume again.
Yeah, very much so. But it doesn't matter for us anyway. And it's a good time to show you that we have plenty of news feeds coming through our platform here. The Live Squawk feed, long list of all the major headlines that come out. It's well worth looking at on our platform. If anything, just to get you caught up on everything that's happened overnight when you've been away or whatever, or to catch up with the stuff that you might have missed, all the data and whatnot. That's plugged into our platform and that's still running perfectly well. So check that out. And if you want to check that out, you can get a 40% discount on the platform. This is only on for another couple of days, so I've been told on the grapevine. So it's not going to be around for long. So get in quick. You get all the stuff, all the tools that you could possibly want, including our chat room, all the analysis, which is posted by our good selves, the team. There you can see Mr. K-Man posting stuff up there on lots of assets, myself as well, taking care of the European side of things, and then Blake and the other team come in later on in the day, and you get all the analysis, harmonics, Gregors, Elliott waves, and what not, as well as all the other wonderful tools you get there. But if you want to see that, you can get in the room, 40% off. Get it while it's hot. Right, let's go through some of the headlines and whatnot. Over in Japan, I've not even set up my calendar again. Look at that, lazy Ryan, always behind. There we go. Right, so we've had the Tenkan survey, latest Tenkan survey out. If I can find it, where is it? There it goes, right in there. So it's dropped a pip. The manufacturing number has dropped a pip to 8 from 9 prior. Non-manufacturers has come in at 30, which is pretty much unchanged. So still holding up that data, not collapsing or doing anything untoward. That is something, an index that the BOJ pays particular attention to. Trade balance there a little bit, I could say all over the place. Exports coming in at 2% as expected. Imports down, but not as much as expected. We're expected to fall 4.5%, but came in minus 2.2%. The trade balance switches the other way into a deficit from a surplus. Again, a lot of this is all being affected by what's going on with tariffs and trade and front money and all that palaver. So this could just be a bit of a washout from those big surpluses that we've seen. Japan's top tariff, he's been called the top tariff negotiator, Akazawa. He intends to visit the US again later this month after this week's third US-Japan talks. Those talks apparently going to happen or the third talk is going to happen on Friday, according to the Nikkei. Just while we're looking at trade and stuff, Japanese auto exports, they fell 5.8% in April, according to Nikkei. Again, a bit of a reaction to Trump's tariffs and whatnot. Over at the BOJ, the upper house has approved new BOJ member Kazuyuki Masu. He's formerly the CFO of Mitsubishi. He'll be joining 1st of July, succeeding Nakamura, who's out. Don't know if this was announced earlier in April, Cave. I don't know if you looked into it.
Not yet.
What his stance is?
No, not yet, Ryan. I didn't look him up yet. Yeah, probably interesting to know. Although Usually, apart from one or two that are slightly off the of the majority, usually those new members will have been chosen with a certain purpose. Most of the time in Japan, that is to walk the general line.
Yeah, and wasn't Nakama was a bit of a well, he can be a bit of a dove at times,
Yeah,
can't he? So
Nakamura was, and there's another one on the other side of the spectrum. I think they must diversify a little bit, but yeah, I don't know about the new one. What is his name? I'll make a note of it.
uh, it's oh, where's it gone? I've lost it in my notes. Oh, there we
Yeah,
go.
tell me later.
Kazuyuki Masu, Masu.
MESU. Okay.
Yeah, look him up. Maybe they in the interview they sit him down, like one of those psychologist ink blot tests, and say, "What do you see, a hawk or a dove?" And
Hmm.
then they pick them based on that.
Yeah.
But,
If he says a bad is bad news.
anyway, right, let's move on to another central bank, the ECB. And ECB's not says we can't rule out a June rate cut, but it's too early to say. Of course, it is. It's always too early to say. He says he needs to see the updated projections in June. Says ECB faces a complicated constellation of challenges. Lots of C words in there. I can think of another C word, but I won't say it live on air. ECB's lunch says market interest rate bets are reasonable. Says rates may need to be mildly supportive. ECB's De Guindos says equity valuations are high and credit spreads are out of sync with risk. Need to keep an eye on that. Not for us. ECB's Kazakh says rate cuts are coming to an end and we will soon reach a terminal rate if the baseline holds. He's one of the hawks at the ECB, but he's been on board with all these cuts, but coming to the end of the road, according to him. For a change, we've had some economic forecast cuts for Germany. This time, the German economic advisors have cut their GDP forecast for 2025 to 0 from 0.4 previously, all going swimmingly for Germany. Yesterday, UK PM Starmer was he went and visited a supermarket, and while in that supermarket, said his EU deal would bring down shop prices. Today, we got CPI data, which pretty much blew the doors off. CPI year on year coming in 2 pips hotter than expected, up nearly a whole point, coming in at 3.5% from 2.6 prior. The core number as well, also coming in 2 pips higher than expected at 3.8%. Everything coming in higher. Retail prices 4.5% higher. This is directly impactful numbers for the shop side of things. And month on month, even going up 1.7%. Obviously, I'm being a bit blasé about it compared to what he said yesterday isn't going to be seen in today's data. But the Bank of England is seeing a bit of an inflation shock. It's something that they were expecting, so they're on the right side of it per se. But I don't think they were expecting this sort of jump, and we'll have to see how long it lasts. As I'm always fond of pointing out, inflationary issues in the UK can tend to last longer and stay embedded longer than elsewhere. So if they're expecting a quick turnaround, they may get it, but it would not be a shock to me if this sort of thing becomes embedded for a bit longer. Obviously, those numbers have caused traders to cut their expectations for Bank of England rate cuts. We're now seeing one more cut this year. Rate futures are around 25 pips of cuts by the year end. Before the data, it was at 36 basis points, so a little bit lower, sort of sitting in between 1 to 2 cuts. Far cry from a few weeks ago when, along with the US, markets were predicting 4 cuts to come this year. Shows how quickly things can change. Kay, what do you make of all that data there from the UK? Is it just a blip, or are we going to be in for some trouble?
Oh, on the numbers, I think they there may be expectations now for it to come down further down the road, but have any of those so-called deals with the EU already been put in motion, or could they have been just throwing some needless checks into the bin, and will that weigh a little bit on the upcoming prices also? It's possible, but as you say, I mean, sticky here. But I find the reaction pretty interesting because we see the reaction in the bond market, but then you had this very short-lived higher blip in the cable or in sterling in general, and then straight back down. And that is something, and I've been saying in the room as well. We look back at nearly all the inflation numbers that we had in various countries or various blocks. You have the algo, the high frequency traders, or the last ones to jump onto it move, and then it completely fizzles away. We saw the same thing on the Aussie. We saw the same thing on the Kiwi happening. Canada was no exception. FX is not the most affected by CPI. I think in FX we need other stuff as well. But it's quite funny that we see those moves and then completely actually reversed. Sterling is trading and even traded lower, I mean, a few minutes ago, but it's trading actually well below relatively speaking, in intraday terms, below where we were when the CPI numbers came out. So I think we need to be careful with what we trade when we think about correlations of currencies towards inflation data. The bond market was much more responsive. We see the UK curve is just moved up a notch. But yeah, the temporary nature, we know about the UK deal with the US, but details are not completely ironed out there either. Maybe another couple of sticky months before it really starts to turn down again. That's as far as I can see. But yeah, as we already said, with everything that's going on, we really need to take data per data.
Yeah, exactly. And these data points, that, given everything else going on in the world, these data points are just, mere moments in time where you get a reaction.
Snapshots.
And the cable rally up through 134.50, it was going that way anyway. So it was just an extra bit of wind up its arse. Trading wise, you want to look at if you get a data point that moves against whatever trends happen in the day. For example, if cable was dropping and got a big rally on the data, that's something you might want to think about, because if data's only traded for 5 minutes, you're going to see a reaction to it. But cable's come back down, but we've seen the dollar doing a little bit of a recovery as well. So it's all moving the same way for now. More inflation data, this time out of Canada yesterday, and headline inflation did come in hotter by a pip than expected, but it's still a chunky enough fall from the 2.3% last month. However, the core numbers, which were largely expected to stay where they were, around about unchanged, also jumped up. So that was the surprise for that data, including the Bank of Canada core number 2.5% from 2.2% prior. Though the loonie hardly blinked over that data, really. The BOC is on hold, and that data pretty much confirms why they need to be in that stance for now. The only question is, are we going to see a little bit of a run higher here too in inflation for a few months? Again, it is largely expected, given all the tariffs and trade stuff kicking in. So it's going to be a funny old time for inflation over the next few months, probably, before we can then start to get a real read of things. We also got the Philly Fed non-manufacturing index number, services number. That was a little bit better, minus 41.9 from minus 42.7 previously. Fed's Mausoleum says long-term inflation expectations remain anchored. Says firms and households are holding back from decisions amid uncertainty. Fed's Bostic has been out 50 times this week. He's hearing an increasing number of firms say that they can no longer delay responding to tariffs through changes in either prices or employment. So they've been sitting on their hands waiting to see what's been going on, and the ones he's been speaking to are now saying that they're going to have to start reacting either by hiking prices or most likely cutting jobs as well. So this could be the start of when that uncertainty starts playing out in the real economy. I've been saying the last couple of weeks, 1 to 3 months, and we're in that month 1 at the moment. So we might be starting to get to see some wobbles coming in. Fed's Hamac says that sentiment data about the economy has been concerning. Says the best action for now is for the Fed to sit on its hands amid all the uncertainty. Goldies have been looking at their tea leaves, and they've been coming up with some revised numbers for Aussie dollar and Kiwi dollar forecasts. They now see the Aussie dollar over the next 3, 6 and 12 month horizons at 0.66 from their prior forecast of 0.60. Kiwi has been revised up over the same time frames to 0.61 from 0.56. So hefty hikes from those guys. Kay, does that mean we've got a top in Aussie dollar and Kiwi now?
Yeah, I mean, forecasts. How many forecasts have actually been working over the past at least 2 years? Not overly
Past
sure.
decades,
Huh?
past 100 years, and
Oh,
never.
yeah. We weren't there 100 years ago, luckily. Otherwise, we would have been moaning for all that time. Yeah, forecasts are what they are, and we have seen how much they're worth when markets start to rock and roll. Whether it be FX or bonds or equity markets. Just you know what we've been saying here now for months, and actually since the pandemic started, we've been talking about it. I mean, one step at a time. What happens today may not be true tomorrow, but if it gets confirmed tomorrow, then we're on our way to perhaps different levels. So and just to put that example into practice, on Monday we had this on Sunday night Monday we had this reaction to, let's say, the Moody's downgrade, and then usually what happens is that the next day, the second session after, let's call an event which is noteworthy. Okay, I mean, I'm not talking about world shockers and stuff like tariff announcement, but still an event that is noteworthy. Usually the second day we know what the market wants to think about it, and most of the time what we saw, or quite often, we've seen a reversal of that, of what happened on the Monday. We see a bit of the reversal on the Tuesday, because the market shrugs it off, digests it, and then goes back to what we were doing before. Now, yesterday we saw a different scenario. Yesterday, yeah, we still saw a little bit of dollar buying at the open of the US, but then the US didn't continue to buy its own dollars. So now we see a continuation of this, and this could mean that we are having something more interesting. But again, we have to monitor this situation day by day, because we don't know what's going to happen tomorrow. So excuse me but making prognosis for what's going to trade on FX in 2026, I wouldn't even start to think about it.
Yeah, no, that's absolutely right. And well, I mean, fair play to Goldies. They tend to change these forecasts every quarter or review them every quarter. So if you think 3 months ago they were calling for 60 in the Aussie dollar, well, they did get it for a couple of days, but now it's rallied 500 pips. They want to change their forecast again. So
Yeah, but if you would put a ranking from best to worst, or closest to furthest away from um, expectations, I think Goldman Sachs is still among the better ones.
Yeah, it's a low bar.
Sorry?
That's a low bar, though.
Yeah, I know JP is probably in bracket as well, but then all the rest are quite wet finger up in the air.
Yeah, particularly Nomura. Though they seem to have calmed down
They
recently.
have calmed down a lot.
Yeah, they were the ones who were they predicting 15% inflation in the US or something stupid like that, or 6-7% rates, interest rates for the Fed. I can't remember what it was, but they were even above my idea where that was going. But anyway, you know what's my thoughts on the forecast. But anyway, they revised up Kiwi and Aussie forecasts. So do with that what you will. Right, that's all I've got on the headline front at the moment. Has you got anything else, Kay?
No, but and usually I don't like to talk about those things, but it seems like in Mexico, and I'm wondering if it had some kind of effect on the mix. What the what is it? The deputy mayor of Mexico City has been shot also. And I don't know, but it's kind of bringing back to the fore the problems that they have with gangs and stuff in Mexico as well. I don't know whether it has had an impact on the Mexican peso, but we know that yeah, politicians are they need to be on their guard over there. But now it could perhaps have had something, but it's rather probably linked to risk a little bit as well. And I don't know, but I just read about that a few minutes ago actually.
Yeah, thanks, mate. Right, one thing we need to be keeping a close eye on at the moment are these JGB yields. Everyone's talking about them. We need to be watching them. We are getting to the point now where things are potentially getting a bit hairy. You know, we've had another strong move up, although it seems to have been topped out at the moment today. But yesterday, again, another big move up, and this is happening across mainly the long end, but the drag is there, and it's getting to a point for Japan terms. You know, a 10-15 pip move in US yields these days is not seen as much, but when you're seeing this daily in Japan, it's getting to a point now where it's going to be putting the BOJ and the government to a bit of a test. Um, I'm not saying we're heading for panic stations or anything like that, but it is getting to a point now where concern levels will be rising significantly. Okay, and people are talking about the spillovers. Kay's mentioned it before. If there's any problems where Japanese investors need to sell US treasuries to bring money home and whatever, there's going to be an impact for FX. There's going to be an impact for US bonds. Kay, I don't think it's going to be like a big, massive contagion, but it could be a bit of a minor tremble, shall we say, to the market that's going to potentially bring some big moves. And as we were saying yesterday, the Bank of Japan are really stuck between a rock and a hard place.
Mhm.
Government borrowing costs are going up. If they
Yeah.
step in, the yen weakens. That is not the direction that they want yen to go. On the other side, you know, costs are going up, but the yen is strengthening, and that's taken out some inflation impacts for imports and stuff. So, what do they do?
Yeah, they are a bit stuck. By the way, we were looking at those yields that came off a little bit in the short term and just on the day from the highs. And I was wondering whether we may have had some unscheduled bond buying by the Bank of Japan. But by now we should have known that they because they usually tell us right after the close whether they done anything, but they didn't. So they do tore just that little bit. Yeah, I mean, we're still there. You know what the ramifications would could be is that okay, the Japanese whales. Every investor is independent and, of course, does its own thing, and they have portfolio frames in which they will be operating. But those portfolios they can change if the Japanese um, bond yields rise far enough, and the Japanese whales judge that the Bank of Japan is perhaps closer to an end of raising rates, and they don't see inflation numbers going much higher. They can decide to start to repatriate money and to reinvest in their own JGB market, and that is potentially creating waves and also dragging other investors, so I would say non-Japanese investors, into the same frame, and then you would see shockwaves in the US bond market for sure, but also probably the European bond market, and obviously a big inflow into the JGB market. And looking at the amounts that they handle, it is they can really shift around pretty hefty amounts. So we will have to. That is something that we are going to be on pretty much continued watch from now. But usually, people like JPIF, other Japanese pension funds, they change their investments framework only twice a year. Now, nothing says that they can't do it in between, of course. But I think if things don't evolve much between now and September, September will be extremely hot for everything Japanese. That is something that I was thinking about, but that is still a while away, and we just actually started. I mean, the first quarter or we are like halfway the first quarter in the Japanese fiscal year. So there could be something that they adapt to if really those yields continue to fly. Now, whether it's and actually that's what I was going to say about the relative independence, whether it be from the Bank of Japan because it is Japan, and then the Japanese whales. There could be some discussions because we have seen that the Bank of Japan had discussions with market participants. There could be some discussions in Japan to ask some of those Japanese big investors, or to show them that Japanese yields are interesting, to repatriate a little bit in between. It is all very possible. It would not be the first time. I know from experience in the old days that the Bank of Japan and the government were quite supportive towards Japanese exporters. So why not the Japanese investors attracting them into the framework? But all of that is theory. And for now, yes, they are between a rock and a hard place. I really think we are going to see unscheduled bond buying very soon from the Bank of Japan.
Yeah, I suppose we potentially have to look at some weekend risk. Early Sunday morning when Asia opens, if they want to pull the trigger at and get their bigger bang for buck.
Friday, a Friday is usually not usually, but a Friday is very attractive as well. You calm the nerves before the weekend.
Yeah, that's true. That's true. So either way, something to keep an eye on. Just keep an eye on these yields. If they keep busting higher, we're going to get closer to what it will be an intervention. We know how that goes. Right, well, let's have a look at what's going on in dollar yen. Kick off there. Now, price it's playing quite nicely at the moment with some of the levels in play. I mentioned this yesterday, that any rebound from down here needed to get back through this 144.90, 145 zone. We got up to it, failed, and we've been all the way back down, breaking back below the 144, which we pulled up short of yesterday. Now, we were resisting below there this morning. We're now back above. Now we're testing it again. So we may wash it out, or we may find a bit more support coming in here, which will enable it to kick on. But the trends within trends is still going. This downtrend is still well entrenched. It doesn't look like it's changing anytime soon, unless we're getting back above, I'd say 145.30s. If we're back above there, then maybe we're turning this around. But otherwise, it's looking a bit iffy at the moment. And a lot of this is yen more so than what's going on in the dollar, depending on what time you're in and up and watching this. So you need to maybe look at your sessions as to what's going on in this one. Again, as Kay said, if the Yanks come in and start buying dollars, then this is going to be going up. But then we get to Asia and all the bonds start blowing up again, and then it comes back down again. So it's maybe something that you could potentially look to trade between the different time zones at the moment. But
and
otherwise, yeah, go on, mate.
and stay up 24 hours a day.
Yeah, or give it to Magic's AI. He'll monitor it for you and give you half your money back. You know what I mean? That's a private joke, sorry, fellas, unless you're in our chat room. But in the meantime, yeah, if we are breaking down, we've got a bit of a last line in the sand here for this uptrend at 61.8. But otherwise, we'll be looking down to these levels, the low 132s, 142s, and into that big old zone down there. So, Ali, you were looking at dollar yen. What were you saying? Let me find it. Where is it? I can't find it. I'm going blind. Oh, right. You're looking at the 4 hour. What are you looking at on the 4 hour? 200 SMA, which is right in there. Yeah, it's something you could lean on. It's coming in against this old fib level here, which this move back above 144 is running into trouble. So if you fancy it, mate. Go for it. You don't need to be offside by 100 pips to know that you're wrong on that one. So if that's what you like, be my guest, my friend. I would more be looking at that 145 again if it holds. I just feel it's a stronger level for me. And you're looking at dollar CAD as well. I was keeping an eye on this one this morning, just to see maybe we've got to move down to this line down here, this 38, 60, 70 area. We came close, about 9 pips off the top of it. Not close enough for me. We have broken under this. Let's go a bit shorter. This 139, which I was showing as support yesterday, and again, retests are resisting it. So you've got your ballpark here between there and this 138, 60, 70 area. Take your cues from that. If we're going back above this, then maybe we're heading up. But if we're coming down here, be careful. If it doesn't hold, then we could see a bit of a deeper pullback, or we could just bounce around in the middle for a while longer. But yeah, I'm keeping half an eye on this one. I might have a little scalp against it, depending on the mood. Now, this one's, although we've seen the dollar bounce a little bit this morning, this one hasn't done an awful lot. Oil's had a little bit of a bounce, so I don't know if this one is riding that train for a little bit. The correlation between oil and CAD has been off a lot recently, but maybe it's just having a little, it can't ignore it for too long sometimes when you get a half decent move in oil. And this has been a pretty short-term decent amount rally in such a short term or short period of time. So we may be looking at that one as well. And yeah, Euro Sterling. I've really been switched off of this one. I'm quite annoyed with myself because we've held this 84 level pretty much, as perfect as you'd like to see it. And the longer it can't go down, there's only one other way it can go, and it's bouncing now. 84.60 is a level to keep an eye on up here. If this bounce is going to run into trouble, that's why I expect it to. And then we get into all this old traffic up 84.80, 85s. So keep an eye on that one. Kay, you got out your short yesterday, didn't you?
Yep, and
you're in the zone. You're in the zone.
Yeah, it's starting to show signs. I think it's well, not only sterling, but yeah, sterling perhaps a little bit, but especially the euro doing relatively well. I would say so anyway. And that was one of the reasons why I bought it back, and also because we were not going lower anymore. My update this morning, I said like, well, if it doesn't go down on the numbers that we had. Yeah, it's probably not. Well, I mean, longs could now start to base themselves on that 83.9505. So it's looking even not even psychologically, but also technically looking a bit bottoming out there. And say if you go through that next red line there in the 60s, and I've got something in the 70s as well. There could be perhaps more shorts running for the exits, or longs getting even a better vibes about it. Yeah, I'd be a bit. I'm not going to go short, that's for sure. I'm not specifically going long here, right here and now either, but it is signing up as being more than just decent level. It's actually being a pretty good level now down there, 83.9505.
Yeah, yeah. Ali, what have we told you? What have I told you? Don't trade. I think it's the biggest account killer you can have. I think something's going to happen, so I'm going to trade that way. Trade what happens, not what you think will happen. You thought CPI would come in lower yesterday, and it didn't. So you traded your I think. Don't trade your I think. Iron nut. Euro dollar. Would you buy it here for another leg higher? Well, that tells me you want to be long. That tells me you want to or you are thinking about buying it. So, what's your you need your justification for buying it, okay, for another leg higher. What's your justification? Your justification is what support levels hold. We've got this 113 down to maybe 112.90. Okay, we've had a lot of support against there when we were above it. Even down to the 60s area, we're above it again. So if you want to go long, you need this to hold on a dip. If not, then you can either go with a bit of a break to see if you confirm through the highs, but then you're running into a bit of trouble up towards 113.80, up towards 114. So if you want a big leg higher and you want to get in, then it's no good asking, what do we think? Is it going to leg higher? You need to find where you would like to go long for it to go higher. So either wait for support where you'd like to see it and give it a go there, or you wait for it to break higher. But certainly right here, I wouldn't just jump in at this price level to try and get a leg higher in the euro. Kay, what are your thoughts on this one?
Well, I mean, yeah, people in the room know. Perhaps here I said as well. I'm a bit long euro dollar, and I like it. Yeah, 112.
If you were flat, what would you be doing here?
Well, there is the 50% of the move lower from April down to in May. The 50% is right here, right around 113.20. We had like a quick look below and bounced again. So if you are a small pips player, you could actually already lean against that level, but then don't stick with it if it goes back below 113.10. But I would, if I wouldn't have anything, yeah, I maybe do something, or I maybe would have done something around that 20 level, and then look at if it holds 112.90 figure, 112, yeah. Because if it doesn't hold 112.90 figure, then we're probably going to be relatively quickly back down to 112.65.70, and then we have to start wondering again: is this move going to hold? So, yeah, yeah, perhaps I would have done something, but I'm looking at it maybe through a slightly different lens. But if you're pure an intraday trader, yeah, I mean, I think. If the states don't sell it first thing when they move in, this is going to push higher. That's what I think. Anyway.
Yeah. So it depends on what you want to do, Iona. If you're looking for another 200 pips higher, then you're not going to be trading, 5-10 pip stops around,
No.
this 13-20 area. You need to plot your bigger levels and where you'd really give it a go. If you're just looking for 20-30 pips, then you look at the short term here, like Kay says, and you look at the levels in between. Right, mate. I'm going to
and then keep an eye on what happens top side around one. You have it there, 113.80 to 61.8.
Yeah.
Yeah, that's the next level, because if you look just a little left, that's the we've had already two highs there in three highs in May. So that is going to be an interesting level again, I think, on the euro dollar if we get there.
Yeah, and this is another interesting one where the fibs actually line up with levels that are already in play. You know, this 1380 was a level before you could even draw this fib. So
Mm.
yeah, I like it when that happens, when you get a bit of confluence around confluence of text around different levels. I'm going to take that off because I'm not a fan of. Well, no, I'll leave it on. Fuck it. You've told me to put it on, so I'm leaving it on now. I don't really like short-term fibs, but we're getting to a month now, so I'm going to
Leave
leave
it on. Leave it on, Ryan. It's a beautiful line.
it. All right, over to you, mate.
Okay. Now here's an interesting question, and whoopity, where are we? Here. Frederick, platinum. I never look at it, okay? I don't, but look at where we are right here and now. This is your platinum, right? I guess. I know Stelios in our room. He's long platinum and he likes it a lot. So he thinks we are going to trade higher. But here, right here, we are on a quite interesting level, I would say. Okay, so if you look at it purely from a technical point of view, yeah, very interesting level. Potential break of a triangle, which would then lead us a lot higher, of course. Which could then lead us quite a bit higher. If you would like confirmation, you wait for 1080, 1080, 81 here, the 50%, and then we should be trading back quite a bit higher. But let's look at what I'm usually looking at. Gold. Yesterday I said if it breaks, we're going to do at least 30, 40 bucks. We've done 65 since then. But it was a decent break. 32.80 was another level I was monitoring. It shot through very swiftly, and now we are back in an interesting zone here. And recall we have been trading that level as well in the past, okay? And now it's supported with some fib lines. 33.15, we are here. Yeah, 33.20 was mentioned as well, so that is right the top where we are now. So 33.15, it's relatively interesting. But if you look at what the dollars are doing, uh, take away, not take away, because they are there, those corrections also, but they seem to be corrections in a move that is looking rather dollar bearish for now or so. But yesterday gold took off way before the rest was taking off. So it is beat, all right, it is beat. And you know my long-term view of it will be beat for as long as we are above 3,000 and 2,800 or so. But it is even on the day-to-day beat. The Israeli-Iranian uncertainty surely also helped to people continuing to buy gold as a hedge potentially. So it is very big. If we get through it, which is, as I say, we're trading around here. So, but if we get through it and then start to, let's say, move a little higher, then start to retest, the next levels here are going to be around 33.55, which is the 56, 61.8. But then have a look at this zone. I kind of like this zone because it's been traded a lot. Should actually take it a little lower as well, down to 33.68 or 33.70, but basically it's 33.70.85. I know we've been trading above, well above afterwards, but I'd argue that if you look at those lows here, if you look at this high here, those highs here, those highs here, those highs here, it is, to me at least, a relatively important level. Sorry. So this is some level that in theory, if we would raise up to there, in theory, this level should resist a little bit. If obviously we are going through, retest and hold it again, then we are likely going to go up to fresh highs. I'll leave 4K one step at a time, but my overall view for this year has not changed. That is that gold is going to be one, if not the trade of the year, and so far. So it trades, even if we got a big setback on those hopes for trade negotiations to go better, the hope for Ukraine-Russia war, perhaps finding some at least partial solution, etc., and whatnot. We see that we still are finding very good buying on any big jobs. Okay. So that is how it looks right now. Silver is trying. Okay, we went through that trend line, but you know, the trend line came to the market instead of the market going to a trend line. Okay, so uh, for me, psychologically, it means perhaps a little less, although it's also been a level in the past. So 3280 is going to be your support for the day. But as I've said already so many times, we need confirmation through 33 and a quarter before we can continue to go higher. Okay, and we are there. We are just in front of it, 33.15 as I speak. So I still would wait for the confirmation here, okay, to to say that silver is going to continue to push higher, okay. If not, uh, then this range is still very much valid, okay. But if we break out, I think we could see a bit of a spike higher, and then I'm going to have a quick look at the Swiss and the dollar Swiss, and it's pretty important because either you look at this as a bear flag, we're broken. I was looking at this shorter term wedge, it's broken. I told you that 83 was going to be 83 or 510 was going to be important. Well, we got the break, and we're already now down to the 61, or went down to tag the 61.8 in the low 82s of the last run higher. This looks pretty bearish to me. I would expect any bid in the dollar, which takes us closer to 83 figure 10 to really find sellers again. A move above would probably mean, and confirm that again above 83.30, that would probably mean that the lower side of the dollar is done. But I'd say it's bearish as well, because looking at the euro Swiss, there is no way that the euro Swiss is staying above 90. I mean, moving above, let alone stay above 94. So that barometer for me, for the overall strength of the Swiss, is still not working against the Swiss franc. Okay, so that means that to me the dollar Swiss, unless a surprise big rally in the dollar starting, this is going to remain a bit heavy over the day. Just interesting thing regarding Ryan's work, and for the people in our chat room, they all know that Ryan is doing the study every day on what the option expiries are going to give for the 10 a.m. New York expiries. There is some quite interesting traffic around 82.5 on the dollar Swiss today. Thanks for that, Ryan. So have a look where the dollar Swiss is. 10 a.m. New York time, okay? So wherever you are, that's the expiry time. 3 p.m. for us here in the UK. And have a look at where the dollar Swiss is, because depending on where the rest of the dollars are trading, if the dollar Swiss would see some attraction towards that 82.5 level, and at expiry, we may have a little bit of a move right after the top of that hour. And with that, Ryan, back over to you, mate.
Thank you very much, sir. Good stuff as always. And yeah, could have a bit of an exciting US session to come to see how markets react, how the US react to what's gone on this morning. So have a great day, everybody. Trade safe, and we'll see you all tomorrow. Have a good one.